Assalamualaikum and hi to Dr. Faizal and my fellow friends. We are from Group 13 will present about DRB-HICOM. First of all, I would like to introduce my team members consists of 5 members, which is me, myself, Zaratul Fala bin Hisham, Nurul Nisha, Nur Nabila Huda, Wan Nur Batrisha, and Nurul Zahida. Our topic consists of executive summary and introduction, analysis on the capital structure, analysis on the ratio comparison, also assessment on dividend policy, and lastly conclusion. For the introduction, DRB-HICOM, a prominent conglomerate headquarters in Malaysia, holds a pivotal role in shaping the nation's industrial landscape. Established as the Datama Consortium in 1980, the company underwent strategic expansions and mergers, eventually evolving into DRB-HICOM BERHAD. Over the years, it has emerged as a key player not only in Malaysia's automotive sector but also in various other industries, including services, property, and defense. Listed on Bursa Malaysia, DRB-HICOM has demonstrated financial acumen and market resilience. Its strategic moves and management decisions play a crucial role in not only sustaining its business interests but also contributing to the overall economic vibrancy of Malaysia. In an era of rapid technological advancements and evolving consumer demands, DRB-HICOM's commitment to growth and innovation remains evident. The conglomerate's ability to navigate challenges, explore new opportunities, and strategically position itself in various sectors reflects a forward-thinking approach.
Hi, my name is Nur Nabila Huda binti Azhar. So today I will present to you guys about the analysis on the capital structure. So one key aspect of financial management is a company capital structure, which is the combination of debt and equity used to finance operation and investment. A capital restructuring seeks to restructure a company debt without compromising its core asset. Included in the capital structure possibility is it other measures used to analyze Proton's capital structure include total debts to shareholder equity, long-term debt to capitalization, and debt to the total asset. So now we move to the capital structure. So a company capital structure is a debt and shareholder equity is crucial to financial management. A company financial and strategic choice may be revealed by studying this structure evolution. We will assume a hypothetical company's capital structure change from 2020 to 2022 and their possible causes in this article. So the first one is in 2020 to 2021 decrease in total capital structure. So the amount changed from 17216487 to 17136,891. So the possible cause is shareholder equity increase from successful activity, the reduction potential due to the effectiveness management or repayment plans, and last one is impact of share buybacks. So from 2021 to 2022, increase in total capital structure. So the amount changed from 17136,891 to 17635,480. So the possible cause from this is debt used for growth or new project, purposeful increase in debt commitments for external cash, and stock issuance for purposeful capital raising. Next, we move to total debts to total asset ratio. By comparing a company's total debt to its total asset, the debt ratio determines the level of leverage it used. So from 2020 to 2021, decline in ratio from 0.18% to 0.17%. So the possible factor for this is surge in overall asset from prosperous activity, investment and acquisition, modest increase in total liabilities, and effective debt strategies managed. Then, from 2021 to 2022, further decline in ratio from 0.17% to 0.15%. The possible factor is continued efficient debt management, diminish need for the loan funding, increase in total asset from successful endeavors or favorable market circulation, initiative funded by stock or active profit reduce overall obligation. So the last one is long-term debt to capitalization ratio. So total available capital including long-term, preferred stock and common stock is divided by long-term debt in competition. Investor might get the risk of investing in different firms by elevation their financial leverage due to increased likelihood of bankruptcy brought by using debt as the primary funding source. Higher ratio indicate risky investment option. So from 2020 to 2021, rise in ratio from 0.31% to 0.38%. Possible factor pursuit of strategic objective or project requiring additional long-term funding. Rise in long-term obligation relative to overall capital structure, and also variation in equity influenced by action like share repurchase or stock issuance. So from 2021 to 2022, continue rise in ratio from 0.38% to 0.39%. So possible factor is continuation of strategic objective or implementation of capital intensive project, use of long-term debt for financing expansion, and also the last one is variation in equity possible influence by stock market swing or business activity.
In 2020, the ratio was 74.66% and increased to 88.3% in 2021, then decreased again by 6.33%, which is 82.03% in 2022. The year 2021 shows the company relying more on debt financing than equity. Since borrowing is an efficient way to fund business operation and expansion, large amount of borrowing pose a financial risk as company have to make interest payment and may be exposed to higher levels of debt. In 2020, the ratio was 28.66%, decreasing to negative 15.33% in 2021, then increasing again to 9.71% in 2022. For the full year 2021, DRB-HICOM's revenue shrank 5.9% year-on-year to 12.38 billion, leading to a pre-tax loss of 291.27 million ringgit Malaysia compared to a pre-tax profit of 540.1 million in the previous year.
Next is return of equity. The ratio of return of equity has shown in the chart where its ups and downs from 2022 to 2020. In 2020, the ratio was 7.13%, decreasing to negative 4.12% in 2021, then increasing again in 2.55% in 2022. The decrease occurred in 2021 due to the group's income declining to 2.12 billion ringgit compared to 3.56 billion ringgit in the quarter under review as the restrictions on movement in July and August 2021 have restricted business activities across the group, and it will rise again in 2022 as the increase in automotive demand driven by the government's sales tax holiday boosted revenue for Proton and other brands at DRB-HICOM and helped boost revenue by more than 35.2%.
The dividend policy of DRB-HICOM BERHAD aims to enhance shareholder value by implementing a consistent dividend policy. In accordance with this strategy, the DRB-HICOM BERHAD recognizes the significance of providing shareholders with a reliable dividend and aims to foster sustainable growth in dividends over the long term. The targeted dividend payout falls within the range of 20% to 30% of the operational net profit. However, when determining the yearly dividend amount, the DRB-HICOM BERHAD will consider factors such as availability of cash, retained earnings, operational cash flow needs, business prospects, future capital expenditures, investment plans, and financial requirements. The DRB-HICOM BERHAD is committed to maintaining sound balance sheet management, ensuring that gearing remains at the manageable level. This is the dividend history of DRB-HICOM BERHAD for the year 2022, 2021 and 2020. They used two different dividend yield type for these 3 years, which is for 2022 and 2021 they used final as their dividend yield type. But for the year 2020, they use first and final dividend yield type. Then, for the dividend per share in Ringgit Malaysia, they have been consistent for 3 years, which is 0.02, or 2 cents for the 3 years. And also for the dividend yield, they have been consistent for 3 years also, which is 1.37%. According to a recent financial analysis on Yahoo Finance, long-term DRB-HICOM BERHAD shareholders have had the experience of stocks that fall short of the market average, with the share price dropping 34% in 3 years versus a market decline of about 3.8%. Investor in the DRB-HICOM BERHAD had a tough time with a total loss of 9.4%, including dividends, against a market gain of about 5.2%. A reduction of or elimination of dividends may be interpreted negatively by the market, leading to a decrease in stock price. Investors may perceive such a move as a signal that the company is facing financial challenges or lack confidence in its future prospects. The percentage of company profit allotted to each outstanding share of common stock is represented by earnings per share, a crucial financial instrument. The calculation of EPS involves dividing the net income of the company by the total number of outstanding shares. The DRB-HICOM BERHAD profit per share EPS decreases by 41% annually throughout the course of the 3 years that the share price decreased. The 13% compound annual share price decline is not as bad as the current decline in earnings per share. Shareholders may view this as a very value-eroding move if retained earnings are not effectively reinvested or do not produce returns greater than the opportunity cost of not paying dividends. Next is total shareholder returns, TSR, is a metric used to calculate the overall return on the investment, taking into account both dividends and other distribution as well as capital appreciation, price change in the stock. If total shareholders return is negative, it suggests that overall return is less than the initial investment. The stock's return can be more fully understood by looking at the overall shareholders' return according to some arguments. For the past 3 years, the DRB-HICOM BERHAD total shareholder return has been negative 31%. A poor total shareholder return may have an impact on the company's ability or willingness to continue paying dividends or to raise them. Investors that depend on dividend payments for their income can see a decline in anticipated cash flow.
As for the conclusion, the assessment of the DRB-HICOM BERHAD's dividend policy and financial performance highlights a critical juncture for the company. While the commitment to a structured dividend payout demonstrates an intent to reward shareholders and foster growth, the challenges evident in the negative total shareholder return and declining share prices necessitate a careful consideration of the current strategy. The decline in earnings per share and overall market confidence indicates underlying issues that require attention. To regain investor trust and align with market expectations, the company may need to address these challenges, potentially reassessing its dividend policy in light of the recent financial downturn. A strategic realignment that focuses on bolstering financial health and sustainable growth is crucial for the DRB-HICOM BERHAD to navigate the complexities of the market and enhance shareholder value in the long run.